Hello, everybody. Thank you for tuning in to another episode of Money Matters. I'm your host, Hung Lu, and thank you so much for tuning in. I know some of you have been watching me for like over a year that I've been doing this. And I want to say thank you because it's so important that, when you take control of your financial independence and taking control of your life and your money, you're actually helping inspire other in our community and building a stronger community, a wealthier community. So I want to say thank you for tuning in all the time and doing that. Okay, so we are December the 1st. Okay, a couple more weeks before Christmas. And so this is a very timely video because, hey, if you can figure out this trick with balance transfers, you may be able to get a couple more Christmas gifts this year. Okay. And of course, Christmas is a great time for giving. So let's get into how we can sort of hack balance transfers with our credit cards and save some money. Okay. So now, this works great if you've got a couple of credit cards, not just one or two. So ideally, the ones that I really like is the Canadian Tire, uh, the credit cards. MBNA also has a really good credit card for balance transfers, but all the other credit cards also do this, okay? So you just want to make sure that you understand the fine print around the balance transfers. But once you get it, it's an it's an easy way to get some extra cash really, really quickly. Okay, so let's walk through this. So I do have a spreadsheet to share. Okay, so let's go through this. And I love this exercise because I've been doing balance transfers for a few years now. And once you understand how it works, it can really, really benefit you. But now here's the thing that you have to be really careful with balance transfers because it can really hurt you as well. Okay. Just like everything related to money, if you don't understand it could actually hurt you rather than helping you. So the whole point of today's short episode is to give you a little bit a couple of tricks, a couple of tips on how to make balance transfers work for you because oh my God, if you know how to make it work for you, it's actually really amazing. Okay. So the first point to point out is that balance transfers are not cash advance, two very different things. Okay. So let's just say you are carrying a balance on a credit card for $6,000. Okay. So for some of us, that's a normal amount. Okay. So 6,000, I'm just going to run this example. The annual interest rate on that credit card is 22.5%. Some people I know are paying like 29. Okay, you might have a promotional credit card at 18. Okay, fantastic. It doesn't really matter. The idea is still the same. Okay. So if you had to carry a balance of $6,000, every single day you're going to be paying about $3.70 if you don't pay that off at the end of the month. Okay. That is a really bad thing. Like you want to get in the habit of paying off your full balance, not just the minimum payment, but the full balance. Okay. And this is a really important concept because if you're just paying the minimum balance every single month, you're not going to be paying off that credit card. And it's actually going to cost you like double the amount by the time you actually pay it off. Okay. So one of the things that I like to say is like, hey, you know what, those groceries or the new TV that you just bought, is it really worth double that amount? Because if it's not worth that double the amount, then you better be paying off your credit card every single month. Okay. So let's just say, so when I was originally running this, I was like, oh, you know what? I actually noticed that there was a difference on my credit card depending on whether or not it was the date of transaction versus the posted date. Okay. So when I ran my numbers, I took both of these numbers into consideration because I was like, how does this affect me? Like it's, 3 to 4 days difference here. And at the end of the day, it's not a big deal. Okay. So don't worry about if it's the transaction date or the post date. It's really just pick a date and stick with it because then that's where you'll base your analysis on. Okay, so let's just say I go with the date of transaction. Okay, so this is when you actually go to the store and you actually pay for something with your credit card. That's the date of transaction. It sits in like a buffer date, and then they post it onto like after it's cleared. Then that's when they actually show it as part of your statement and they start charging you depending on how your credit card is set up. Okay, so let's just say I have a date here of June 9th, 2025. Okay, so this tells me that based on, here, I'm going to go over here for the transaction date. From June 9th to May the 9th, that's 31 days. Okay, so then that means that they're going to charge me $114 on the 6,000. Okay, so the way that calculation there worked, I'm just going to make this a little bit bigger here. Okay, is you take the $3.70 a day times that by 31 days. Okay, that's how much interest I'm going to be paying on the $6,000, assuming that you don't pay that $6,000 off at the end of the month. Okay, so you're carrying this balance. Okay, so it's going to cost me $114 per 31 days. Okay, which is, it's not too much, but when you look at, like, if you're carrying this balance for a while, it does add up. So you do want to pay that off. Okay, so the first thing. Okay, so now with the balance transfer, that means I would have a second credit card and they're saying, hey, Hong, transfer this $6,000 into this other credit card. And we're only going to charge you a 2.5% fee. And usually, I'm going to change that back to 0. So they charge you a one-time, in this case, 2.5% fee to be able to do that transfer. And then after that, for 300 days, they charge you 0%. Okay, this is fantastic because basically I can get my other credit card to pay the $6,000 off for me. Then I get it for free. Like, it doesn't cost me anything except for this 2.5% for 301 days. Okay, but now I'm going to actually show you where you need to be really, really careful here, because sometimes it doesn't make sense to do the balance transfer. And if you know where those bad points are, then you can avoid them. Make sure you only do the balance transfers when it makes sense. Because when it makes sense, then you can actually make more money, you can save money, you can leverage more. There's just like so many things that you can do with it. Okay, so if I had to just pay this, like if I carried the balance over and I had to pay interest on that 6,000, it would be about $114, okay, per month. Okay. Now, if I took the promotional fee, paid the 2.5, now the 2.5 is highlighted because this will change depending on your credit score and how much promotions this credit card is going to give you. Some credit cards might charge a 1% fee, some are 3. So you need to make sure that you read the fine print on what this promotional fee is. Okay, so I'm going to run the example here of 2.5. So that means it's going to cost me $150. Okay, and the way to calculate that is you take your 2.5 and you're timing it by the 6,000. So you take the amount that you're going to be transferring over and you times it by the 2.5. That is a flat one-time fee. Okay, so now I'm going to be paying $150 to have my other credit card pay the 6,000. Okay, so does it make sense? Okay, so this is where you need to ask yourself, well, how long are they giving you for this 0% interest rate or super low interest rate? Like, how long is this promotion going to last? Okay, so in this particular case, when I ran it, it was expiring 301 days later. Okay, you need to know this expiration date, because if it's 30 days, okay, then it might not be worth it. If some of these balance transfer promotions are 60 days, 3 months, 6 months. In this case, it was almost a year. Okay, so I'm going to run it for a year. So I'm going to put this out there. If you want this spreadsheet, just email us or send me a DM, depending on what platform you're watching this on, and we will send you the spreadsheet. Okay, happy to share it. Okay, so 301 days is what this particular promotion was giving me. Now, I have a note here to put it in my calendar to always pay it 1 month off early. Okay, because the last thing you want is to forget to pay off that whatever balance transfer that you're doing, because if you forget to pay it off, they hit you with the full interest rate, and you don't want that. Then this whole calculation just goes down the toilet. Like it doesn't make sense at that point. Okay. So you want to make sure that one, you pay off that full balance transfer at the end of the time that you need to. So I always make a note for myself to pay it off a month ahead, or at least to start making sure that I start moving money around again to pay this off, because I don't want to carry anything after the expiration date of, whatever time frame they give you. Okay, so the rate is what they're going to charge you on that money, that's the 6,000 in this case, to do that balance transfer. And this is where you have to be super careful, because in the fine print, it may say per month or per year. And this is where you really need to like read it or have that conversation with the call center when you're doing this balance transfer. Because even though they might advertise that it's 0% per year, they may actually charge you something depending on what your credit bureau report credit score is. Okay. So the lower your score, you don't want to do this. Like, if I think the rule of thumb is that if your score is 650 or less, you don't want to be doing any balance transfers, because one, they may pull a hard credit check on your report, which will give you a hit against your credit score. And because you have a bad credit score already, they may not honor this 0%. They may actually charge you 1, 2, or 3%, which at this point, the numbers may not work. And then you also want to double check that it's per year. If it's per month, even at 1%, it doesn't make sense, okay? Because at 1% per month, you're paying 12% already on that money. You need to figure out another way of paying off this balance, okay? So I'm going to go back to the 0% just to show you what the numbers look like, okay? So if all I have to pay is the 2.5% for the promotional fee to be able to do the transfer over, and then I get charged nothing for 300 odd days, and then basically then I just pay that money back. That's super fantastic, because basically now, instead of paying 114 every single month for my original card, I pay the 150. I don't pay anything for 300 days. It literally cost me 2.5% to borrow this money. That's cheap. That's so cheap. Okay. That's cheaper than the line of credit, definitely cheaper than a credit card. Okay. So the way to calculate this 2.5 is you take your 150, whatever your total cost is for borrowing this money, which is in this case, it's the promotional fee of 150. Divide that by the amount that you're transferring. So in this case, $6,000. Okay, so this 2.5, the cost of borrowing will change depending on how much you're transferring and what the promotional fee is. Okay, so now let's run this scenario with a 1% interest rate. Now, this is I have to stress this. Make sure you know that it's per year, because if it's not per year, it doesn't make any sense. Okay, even at 1%, it doesn't make any sense. So 1% per year is perfect, okay? Even 2% per year is definitely doable. Okay, so now at 1% rate on top of the 2.5% one-time fee, okay, it's going to cost me $60 for a year. And then so to calculate that, you take your 1% times your 6,000. Okay, so easy math there. Then you divide that by the number of days that you're going to have this out. So I'm going to assume that I'm going to leave it out for the whole 300 odd days. In reality, though, I don't leave it out that long. Okay, but just to show you the extent of how great this offering is. Okay, so you take your, let's see here. So the 60 times the 301 days, divide that by 365 days. So your $60 times your 300 over your 365, that will give you the cost over your promotional days. Okay, so $49. So $50 for accessing $6,000 for 300 odd days. Okay, so really, really cheap. Okay, so then you do, okay, well, what's my total cost of borrowing here? So the total cost is your 150 plus your $49, so about 200 bucks. Okay, so now my cost of borrowing now went up to 3.32%. So that's basically taking your 6,000, so your $200 divided by your 6,000 again, okay? So that is 3.3%. Still super cheap. Like when I look at borrowing money this way from a balance transfer to maybe borrowing money from a HELOC, the HELOC is prime plus, right? So even if it's just prime plus one, it's still going to be higher than 3.32. Okay, so now let's just say the institution is charging you 2.25 and they go, let's say 2%. Okay, it's still really cheap to borrow this money. Okay, but now here's the question though. If you're going to do balance transfers, one, you got to make sure that you can pay off the entire balance transfer at the end of the promotional time. This is a short-term fix for cash flow issues, for liquidity issues. It is not a long-term fix, meaning that you don't want to take this and constantly carry this over and over and over. And you definitely don't want to leave it in this credit card after the promotional period because now you're back up to the 20%. Okay. So this is a short-term fix for managing cash flow and liquidity. The other thing to consider is if you have to do this balance transfer, okay, can you do something with that money that's going to make you more than the cost of borrowing? If you can, like, so in my case, like I'm a full-time investor, so I can easily make 8%, 10% on my money. Okay. And even at 8 or 10%, that is the norm. Okay. Like, so that's the average. So if you can do 8 or 10%, well, that's way higher than 4%. So of course you would do the balance transfer because you can go and make 8 or 10% somewhere else. Okay. So the question is, can you make more than the cost of borrowing? And if you can, then definitely the balance transfer is the way to go. Okay, so now a couple of things to keep in mind as well is that if you are using this credit card for other things like purchases, regular purchases, one of the things I would advise you to do is not mix your credit for multi-purposes like that. If you're going to do a balance transfer, keep the balance transfer only. Only use that card for balance transfers and max out the amount that's available on that credit card all the time. And the reason for that is one, you don't want to be stuck paying cash, like paying every single month for something, because when you pay towards a credit card that has grocery bills, gas, and a balance transfer, they actually put whatever payments you make towards your cash advances and your balance transfers first before paying off those groceries and gas and stuff like that. So you want to make sure you understand where payments go towards and what's the capital stack. Like what do they pay towards first when you make an actual payment, okay? So if you have one credit card just for balance transfers, make sure you don't do anything else with that except for balance transfers and only max it out as much as you can. Have another credit card for your groceries and gas and all that other stuff separately. Okay. Now, the other reason why I'm also suggesting that you have one credit card that you max out for balance transfers all the time is because if you keep maxing it out all the time and then you keep paying it down, then after a while, you can phone that credit card company and be like, hey, can you increase my balance? Okay. And because you've been doing these balance transfers and you're in good standings, most likely they will give you an increase on your available credit, which is fantastic. Okay. So you want to maximize that amount that you have available to do balance transfers every single time if you can. Okay, so what else do I have here? So you definitely want to make sure that you make the minimum payment, okay? So with these balance transfers, you still have to make a minimum payment every single month. So as long as you make that minimum payment, they don't charge you the interest or they only charge you whatever the rate is that they say they're going to charge you, but you still have to make that minimum payment, okay? The minute that you miss that minimum payment, okay, and this is big. If you miss even one minimum payment, and in my case here, I wrote down two because I think for some reason I must have spoken to them and they must have told me, okay, Hong, if you miss two payments, this is what happens. So you want to ask them, okay, what happens if I miss a payment? Okay, because if you're going to miss a payment, it's serious. Okay, because what they do is they cancel the promotion. Okay, you still pay whatever fee you have to pay to transfer the funds over. So this 2.5, you already paid that. So you lose that. But then what they do is they turn around and they cancel this cheap, cheap rate and they bump you right up to the 22% rate. Okay. That if you don't manage this and you miss a payment and you get bumped right up to the 22, this whole calculation goes out the window. Like it doesn't make sense at all at any point. Okay. So you definitely want to make sure that you understand the fine print around paying off these balance transfers and what happens if you don't make your minimum payments and where the capital stack is on your money if you're making extra payments on top. Okay, make sure you have a payment plan for when your promotion expires. Okay, you don't want to be carrying this balance transfer over into this high interest rate. Okay, if you can get another balance transfer, okay, well then maybe it might make sense to keep balance transferring the balance transfer. Okay, that's a different strategy and it might be worthwhile doing. Okay, so that is what I have for you today. Thank you so very much for watching and feel free to give me any comments below. I look forward to hearing from you. Maybe I made a mistake on my calculation. Maybe my thought process here is completely off. So I would definitely welcome any feedback that you have. Thank you so very much for watching and have a great rest of your week. Thank you.